So good morning, good afternoon, and welcome everyone to this session, Innovation for Climate Resilience and Financial Inclusion in Latin America. This session is hosted by the CIFAE Alliance, which stands for Climate Innovation for Adaptation and Resilience, which over the past year has been advancing the conversation on inclusive climate finance, particularly exploring how financial service providers can and should adapt to better serve populations who are vulnerable to climate change, particularly women who are disproportionately affected and are often first responders in their communities. We all know that climate risks are creating a new layer of financial exclusion. If financial institutions, financial service providers, investors, DFIs, and bridge builders like ourselves don't evolve, the progress achieved in inclusion over the past decades could easily be reversed. Today, 35% of people in low-income countries have already been hit by a climate shock, and in 72% of the cases, it has resulted in a loss of assets. Yet, less than 3.4% of total climate finance goes towards adaptation. So bridging that gap is not only about capital, it's also about knowledge transfer, it's about technical assistance and ecosystem building. So with this context, I'm so honored we are joined today by leaders driving transformation across Latin America, from both the investment side and the financial service provider perspectives. With us today, Luca Torre, co-founder and co-CEO of Gawa Capital, managing over 220 million euros in assets across 4 funds, and leading the Quali Fund, which has many of us excited, a blended finance vehicle targeting 300 million euros, combining equity, debt, and 12 million in technical assistance facility. Also with us today, Alan Pierce, Impact Acknowledged Sharing Manager at Alive Ventures, with 80 million in assets under management, 14 investments, and over 13 million lives impacted across Latin America, mainly in Colombia and Peru. Also with us, Maria René Quintanilla, Deputy Manager at Banco Integral in El Salvador, leading product innovation and support small businesses and farmers, serving over 40,000 clients with 27 branches and over $218 million in credit portfolio, where 49% are women and 92% are productive loans. And also with us, João Maltese de Matos, joining us from Brazil, representing Cresol, a 30-year-old cooperative systems of 59 cooperatives across 19 states in Brazil, serving over 1 million members in 3,500 municipalities, 80% of them in towns under 50,000 inhabitants. Cresol channels $2.4 billion towards the green economy, having reached 7 million people through financial education, and ensures leadership roles are held by in 37% of the cases by women. Welcome and thank you so much. Luca, we're going to start with you. And let's begin by exploring how capital can adapt to the new climate realities. With Quali Fund, how have you structured it to mitigate risk for both the investors and the smaller financial service providers or climate solution providers you support? And in that structure, what trade-offs do you see between generating financial returns, driving climate adaptation, and promoting inclusion? Luca, over to you.
Thank you. Sorry, I was just trying to unmute myself. Thank you very much, Nelly, and thank you very much for the invitation to be here. So yeah, Quali, as you rightly pointed out, is a blended finance impact fund that we at Gawa Capital, we designed to help primarily smallholder farmers and small businesses in emerging markets to adapt to climate change, while still also, which is very important, delivering attractive risk-adjusted returns to investors. And the fund invest in 2 things, just so to provide some context. Invest in local financial institutions, bank, cooperatives, and microfinance institutions, try to helping them to create new lending products. I'm sorry, I had another window open, and so I was hearing myself as well at the same time, and I guess that there is a little bit of delay. So
no worries, you can go again.
I'm back. So saying that he's investing in 2 things, he's investing in local financial institutions and he's investing also in climate solutions providers. So the companies that offer things like efficient irrigation systems, solar dryers, etc., etc., etc. Now, Quali brings together 4 different groups of stakeholders that typically don't interact. And that's the objective of Quali. We have investors, on one side, we have local financial service providers, we have climate solutions providers, and then we have the vulnerable communities themselves, so farmers and small businesses. Now, for investors, in order to bring them into the platform, provided that they are very concerned about risk and return, we help them bring them in with first loss layer, which was provided by European Union and the Green Climate Fund. For financial institutions, we combine capital with technical assistance. So we're investing in the financial institutions and we provide the technical assistance so they can innovate and lend for adaptation without increasing their risks. And for the climate solutions providers, equally like for the financial institutions, we provide growth finance and we also provide technical assistance so that they can tailor their products to the needs of the small farmers. And finally, for farmers, we also have an instrument which has been provided by the Global Environmental Facility that basically make technologies more affordable. It's a kind of selective subsidies that can help farmers adopting those technologies. So basically, Quali isn't just a fund; it's really a platform that through blended finance aligns the incentives and brings all together these different actors, which is really, I think, key to really provide a real problem. So one last point that I would like to mention, relating also to your question, is the fact that providing, and I guess that we have the other panelists will be able to provide even more insight on this specific point, but we don't believe there is a trade-off between the financial returns, adaptation, and inclusion. They are not in conflict. They actually reinforce each other. When financial institutions really help its client become more resilient through better water management, for example, their own portfolio becomes stronger, repayments improve, risks go down, and growth at that point really becomes sustainable. So really, if we believe that if done right, resilience and profitability move together, and blended finance can be a very important tool to do that.
Thank you, Luca. And with that encouraging view, which I think becomes the norm in the next few years, I'm going over to Alan, who sits at the intersection of climate tech and finance, working with the innovators, the startups in the space, who are also working very hard with populations who are hit by climate shocks and are vulnerable to climate change. Do you have any success stories in your portfolio where you can share about what lessons have you drawn about the role of technology, data, or business models in these moments?
Yes, definitely. Thank you, Nelly. Pleasure to be here. I'd like to highlight maybe one company specifically. It's a company called Gawa Capital. So this is a company that provides tailored financial products for smallholder farmers in Colombia. So these are products that are really tailored to the context of these farmers, their cash cycles, seasonality, and things like that. But Gawa Capital also, they see climate resilience as kind of a strategic imperative as well for their, tackling that as a strategic imperative for their company. And they've developed a couple tools, kind of complementary offerings to be able to do that. So one is parametric microinsurance. So these products trigger payouts when certain conditions are met. So for example, rainfall falling below a certain threshold. So rather than these farmers having to go through the process of proving actual losses, these triggers, the triggers are based on pre-established thresholds, for example, around weather data. So this makes payouts faster, and it can be much more inclusive than maybe a traditional kind of insurance approach. And like in the past 2 years, Gawa Capital has paid out more than $500,000 US as part of this approach to these customers. And then another thing that they have is they offer contingent credit. So for clients that have an active balance, they can access a same-day disbursement, for example, for a climate-related emergency. And then they also, Gawa Capital offers some grace periods for these climate-related emergencies as well. So this together helps Gawa Capital ensure that their borrowers are more climate resilient, able to respond to climate shocks, and overall ensure that the well-being of the human beings is taken care of, but also the well-being of their customers in the long run, which then has a positive impact on the performance of the company as well.
Thank you, Alan. And we'll go back to some of these examples. And from this tech-enabled adaptation and the investor's perspective, both from Gawa and Alive, we now turn to the financial service provider's perspective. And we have two of them with us today, as I mentioned. And we'll go start with Maria Rene at Banco Integral. And in El Salvador, Banco Integral is really grappling with very real climate shocks, drought, flood, crop failure. And could you share some of the operational challenges you see when clients are affected, say in repayment behavior, need for emergency liquidity, collateral loss? How do these challenges differ from women and men? And how are you going about your client base who are facing these challenges?
Thank you, Nelly. First of all, we have a lot of several critical challenges. In periods of crop loss or droughts, small businesses suffer significant drops in income, which reduces their ability to meet scheduled loan payments affected by floods or supply chain struggle. Also, we have clients often need short-term funds to cover basic needs like food, transport, medicine, aftershocks, which they may try to fulfill by borrowing often on unfavorable terms or via informal sources. We also find that many clients, particularly in rural areas, do not have titles to land or their collateral is destroyed or loses value in climate events. Women are disproportionately affected because they are less likely to own registered property here in Latin America, making their access to formal finance more limited when risk increases. We need to increase monitoring of climate risk in loan portfolios, visit remote areas, which increases cost. For the perspective of women, women often manage multiple income streams. A climate shock may affect one income source, but they may have less buffer to absorb loss than male clients whose principal income may be more formally insured or diversified. Women frequently face a trade-off between repaying loans versus meeting urgent needs for their households like food, health, schooling. This means repayment delinquency may increase in female clients even if their intention and commitment are strong. As mentioned, women often own legal title, don't own legal title or formal collateral. So when risk is higher, lenders see higher perceived risk in loans to women and may require a stricter term which can limit access. Demand for emergency liquidity tends to be greater among women, especially in communities where formal employment is less available.
Mm-hmm. Thank you, Maria Rene. This is a very comprehensive perspective, and I'm sure that you guys are going to evolve and grow so much because both you and Banco Integral and Cresol are working with Gawa Capital and the Quali Fund, and we are all very eager to see that evolution. And with that context, let's go over to Joao in Brazil. In a cooperative model like Cresol, you are very close to member communities. And just very much like Maria Rene was sharing, what climate risk are your members' experiences on assets, cash flow, inputs, and how do these shocks shift their priorities in terms of financial needs? And from that ground view, what opportunities or constraints do you see for climate resilient financial products? And also if you can share a little bit of how you guys have adapted and deployed some of these.
Hi, Nelly. Thank you for the opportunity to share our point of view. As a cooperative, as you said, we have a dual purpose. In one hand, we have obviously the financial results because we are a financial service provider. So we must have these results to share with our members. But we have this other purpose, this other pillar in our purpose, which is the social impact. And this is why you often see cooperatives like Cresol going into less developed regions and with smaller economies. And this also means that they are also more vulnerable to climate events. And as you said in our introduction, 80% of our branches are in places with below 50,000 inhabitants, and this gives us a huge responsibility to be in all links in the supply chain, from the production to the final consumer. And when climate events, like Maria said, the same like droughts, floods occur, the impacts in these small economies are immediate and it multiplies quickly. So in these moments, our members' priorities are urgent liquidity, like credit to recover lost assets, and also inputs to restart production in order to overcome this situation. And without this, the whole local economy risks to collapsing. And this is why cooperatives like Cresol must act fast, not only to protect our individual members, but to safeguard the resilience of the wider community. And to brief our challenges, main challenges. I would say that cooperatives' purpose is connected to our members' needs in these smaller economies and more vulnerable.
Thank you, Joao. And we might go back to some specific examples in the second round, which we're going to start again with Luca, who left us with a positive note. There's no divorce between financial returns and climate resilience, and this is a win-win-win scenario. And also, like Joao was mentioning, there's a trickling effect in the communities, not only for those who have the financial services, but also the community around. And you spoke earlier about your restructuring risk and the Quali Fund. And as you've been doing your due diligence or selecting these financial service providers, particularly those who are going to be receiving technical assistance, what have you seen are the key constraints? What are the main needs? Is it data, capacity, liquidity? Is it the regulatory regimes that limit their ability to develop these climate resilience offerings? And how are you guys at Gawa proactively supporting them to overcome some of these constraints?
Yes. So as mentioned before, Quali Fund doesn't only invest into financial service providers, but we also provide technical assistance through real experts. And if we don't have the expertise inside, we go out and bring the expert in. So I think that the key issues that you listed are all very relevant. But I think everything is around one central idea, which financing adaptation really requires a deep understanding of clients and local conditions. And that's why I think the financial institutions can play a very important role, because you financial institutions are rooted into the local needs. But the fact, I think the constraint is that how do you turn that kind of deep understanding into actionable lending decisions? I think that's where we as Gawa Capital can help. I mean, most FSPs, I was saying, they know their clients very well. Their own officer visit farms or clients very, very regularly. But the challenge is how do you capture that knowledge systemically to build, MIS system, credit processes, risk models that really integrate climate data and make the decision, the local insight scalable. And I think I would like to mention three ideas that we are and we will be supporting our investees. One is helping building taxonomies and standardized framework. Is very important that helps institutions classify and measure, adaptation finance in a consistent way. So that's the first thing. The second one is data and analytics. Climate risk models for smallholder portfolio are still evolving. There are many FSPs that lack the localized climate data, and the external model are often not granular enough. So there are some specialist service providers out there, and one of them that is providing also taxonomy service, YAP, I can mention that we've been working with them, and they are very good. So the idea is that how do you integrate those data analytics into the day-to-day business of the financial institution? So taxonomy, data and analytics, and the third one, which brings the other two together, is basically building capacity and product design. How do you actually how do you design a product that is really able to lend for things like irrigation, water harvesting, resilient seeds, etc.? Some of these products require some very specific understanding and might require further client insight. And as I said, in our case, we do have agronomists and climate experts that do help with that.
Thank you, Luca. And Alan, from this perspective of the technical assistance, I know you also do some of this with the startups that you work with, and you also have gender lens investing. Could you share some insights of these two perspectives?
Yes, happy to. Particularly around the TA piece, this is something that we do in a very profound way with all of our investments. Investing for climate resilience can be difficult because it's difficult to measure. We're still working on understanding how to measure climate resilience. But one specific example I can give, maybe we did an impact measurement project with a company that installs solar power in off-grid areas in Colombia. And some of the feedback that we got from that study, the impact is very high, but the challenges were also very high in terms of the maintenance of these panels and using them because of increasing drought, increasing high levels of heat, causing these panels to malfunction. So getting that kind of feedback from and insights from the people on the ground is helping us and our investments kind of understand from ground zero there, what is actually happening on the ground. And so that then we can work with the company and the company can work with the communities to improve their offering, improving how it's delivered, improving how it's being maintained as well, to then improve the resilience of these communities in the face of these shocks. So for us, the TA component is essential. We also do a lot of work around gender inclusion, and I believe Maria mentioned how all of these issues are kind of exacerbated when you add this gender lens. Women are disproportionately affected, so the extent that we can add those lenses to our TA work as well gives us another way to work with our companies to both improve climate resilience and also the gender aspect.
Thank you, Alan. And going back to those of you on the trenches, Maria Rene and Joao. Maria Rene, so what kind of products are you guys deploying? What innovations are you piloting or considering?
Well, in innovations, for example, for clients impacted by climate events, especially in rural areas, we offer loan restructuring options to reduce payment and adjust to their new reality. Also, we have loans specifically for irrigation, water storage tanks, solar lighting. Such investments are especially relevant to women who engage in subsistence farming or household food provision and often manage household water, cooking, and with the aim of increasing micro-entrepreneur knowledge to help to diversify their income and improve their finance. We have more than 44 business training programs for clients and non-clients, of which 54% of them are women. Simplify collateral requirements where possible, or the use of warranty funds offered by the Development Bank of El Salvador, which provide collateral for product loans and more favorable conditions for green and women loans.
Thank you, Maria Rene. And what about you guys, Joel? How are you seeing the community acceptance? How is this technical assistance journey going, and what is the uptakes? And can you share some examples of where you've had some successful uptake?
Sure. People don't have this knowledge. People don't understand, mostly in these vulnerable areas. They don't understand the true value of this kind of products related to climate resilience and building a more sustainable future. And to make to having this comprehension, we have a communication, but it all start a communication challenge, but it all starts with trust, and to having this trust with our members. And if you search on our website cresol.com.br, you'll see our mission everywhere, and our mission is to develop our members, their businesses, and the whole community, and all this through a close relationship with him. And to have this close relationship, we have two main challenges. In one hand, we have the internal challenge with our mostly branch managers, because they have to understand what this kind of products or issues or solutions we have to improve these things to our communities. And if they don't understand this real value, we are taking the risk to these products just become another item on our portfolio. And what we try to work with them is to make them understand that when we create a healthier member, our credit portfolio also becomes healthier and sustainable, and more sustainable. So the other challenge we have is with our members themselves, because most of them are in financial vulnerability, and sometimes paying for insurance or adaptation lending can feel secondary. And so we must show them that these kind of products are not expenses, but they are investments to build this kind of sustainability in their properties. And that's why we assume ourselves not only as account managers, but as a financial consultants. And to having this financial consultants assistant, we have those partners where comes Gawa. Gawa is one investor who helps us to having this relationship projects with our members. And I will just brief some because I don't have much time, but later I will attach here a presentation to go deep on that. But we have two entrepreneur projects already finished. One of them already finished, and one is finishing in the last quarter of 2025. And they are mostly with our family farmers or small and medium businesses. And we impacted over 500 family farmers, and we have over 6,800 technical assistants and 11 seminars to work their properties and the whole business. We are also currently implementing another one climate resilience project with family farmers that aim to create a tool to measure the greenhouse gas emissions and on members' properties. And the goal is to improve their greenhouse gas emission. And we have also another one. I'm trying to be as fast as I can. And another one is to have a diagnosis, action plan, and also to create more green-friendly products in our portfolio. So this is just a few things we are working with Gawa, but I will attach later our presentation to show people what we are doing. And I want to thank Gawa to being our partner, and we're looking forward to having more and more partners who knows, like alive ventures, and also keep with Gawa more strong.
Thank you,
Thank
Joao.
you.
Thank you, Joao. And with that note, I think we're all leaving in an encouraging note, both from the investors and from the doers, the walking the talk, that are going the extra miles to build this trust, to deliver this technical assistance, and to create the new products that the world needs and that we all need for adaptation. Because as Luca, Maria Rene, and Joao said, this is something that will have a win-win effect. It is not only about financial results, it's about all of us growing and adapting to a new world. Thank you so much to the Financial Inclusion Week organizers and all of you. We're going to be publishing a blog where you can learn more of these incredible organizations doing great work on the ground. Thank you.